You ready?
Yeah, let's do this. Hey everybody, Bree Milani with Sky Insurance Brokers here on another episode of the Greatness Podcast. And today we have a very special guest on. Actually, we were supposed to have him on, 2-3 months ago.
Yeah.
He got sick, I got sick, things just kept happening. So we are here finally getting to do a great episode with Mark Avila with Pacific National Lending. Thanks for coming on.
You're welcome, Bree. It's a pleasure to be here with you.
Yes, I'm excited. I know you've been in the industry for a long time, so I'm kind of excited. Let's take everybody through kind of where it all started. Talk a little bit about your personal life and how you got in the industry.
Well, I started in the industry back in early 2000s, around, I think it's 2002, 2003. I actually started with AmeriQuest.
I think you're like the third or fourth person to say that.
Yeah, I mean,
that we've had on.
Some of the people watching probably will remember AmeriQuest, and I kind of say I cut my teeth on it. So when I started, rates were high, and the way AmeriQuest, I guess the way they marketed to people and the way we were selling was a little different than what we do today. Mm-hmm. I worked with them for about a year and decided that I wanted to try to go to the broker world where the rates were a little bit more competitive. And I ended up working for a place called Lincoln Mortgage. And there, it was funny because I was selling like I was still at AmeriQuest. So they really liked me there because I was selling AmeriQuest rates and whatnot. And but we had the difference there is that we had a variety of programs. So we could do subprime, we could do conventional and A-paper. And that's really what I liked about it, is being able to touch, being able to help everybody.
Right.
So even those people that still had bad credit and needed to try to refi, we had a place for them. And people with good credit, obviously, we had competitive rates. And at the time, remember some of my first loans, it was like 6%.
Yeah.
6 and an 8%, I remember. And what's funny is the people were just doing somersaults because they were coming from 8%.
Right.
And
2% lower.
These are 700, 800 score borrowers, so A-paper borrowers. So they were really happy to get that. And so that's why now, even when rates are going, well, at the time of we're talking, even the rates are kind of ticking up a little bit, it just doesn't kind of faze me. I just kind of roll with it somewhat, and I go back to my roots, when we and how we were selling. So from there, from Lincoln Mortgage, I ended up being a rep, believe it or not. So
I don't think I knew that.
Yeah, I was a bank rep.
Oh my gosh, I could totally see you doing that. You got the personality for it.
And the reason why is because the reason I went to go be bank rep is because every time the bank reps came through the office, they were just, and I just imagined, man, these guys, it's so easy. They're just driving around, got the windows rolled down, the radio on, and he's like,
lots of people think of my job too.
Yeah,
we just get to hand out cookies all day.
That's right. So you don't know the vigors of being when you're actually having to get in a car and you're driving through all the traffic and having to go, I gotta be there, So, well, I learned that pretty quick. And the company that I was with, there was a lot of lenders popping up back in the mid, I say 2004, 3, 4, 5. Mm-hmm. So, and they were all trying to get into the game as far as selling the option arms and different types of lending programs that cater to people that didn't need to bring no doc type of loans, stated loans. And so this was another lender that was just, they were actually a subsidiary of Impact Mortgage, even though it wasn't Impact Mortgage. So they were selling Impact's products, which was basically a lot of stated programs and programs that were difficult even to get approved for back then. So I was out. It was not to go delve too much into it. I would just send a lot of business, and it was trying to we call it putting a round hole in a square peg, or the opposite, so to speak.
Yeah.
So that's what a lot of these loan programs were. And these loan applications were, and I ended up leaving that company and getting back into the lending business, or going back to work with a local realtor, where I was going to get my real estate license, but I ended up actually going to do loans again with, I believe it was Mortgage Excel. I was trying to remember because there was another company for Mortgage Excel. I worked there for about a year, and then I landed with Cornerstone Mortgage, which
Okay.
is
I think they're still around.
Cornerstone Mortgage. There's some guys that are still around. I don't want to drop any names
Yeah.
because I didn't ask, if I, before I came on there. But some of the guys that I work with are out doing home flips and stuff right now, and but that was great. I mean, that was right before the market crashed, and I kind of called that era kind of the wild, wild west because the people were just, there was no regulation. So there was no government regulation. And anybody that's seen or read the movie or the book, The Big Short, will know a little bit about how things were going at that time.
Like.
So that's during Cornerstone, that's kind of when it reached its peak or head, or whatever you want to call it. And that is when, one day I ended up breaking out and trying to do my own thing there. And that lasted about 6 months because I woke up one day and like 6 subprime mortgage banks just completely imploded on themselves, or imploded, and just, it was, the market crashed, the bank system crashed.
It was fast.
It was fast. So, if you had so much volume, how many millions of volume you had in your pipeline, it completely just evaporated. So it was almost like similar to what happened during the pandemic for everybody that was in the service industry.
Right.
All of a sudden overnight, you can't even do your job. So it was the same thing. So that's what happened to lenders in the 2008 crash.
Right.
So I kind of felt, for them, because obviously in the pandemic, rates got so good and our business sort of excelled.
Right.
But I know exactly what they were going through because we went through it back in 2008. And that was definitely our own doing back then. So we kind of,
I've heard that as a trend. It's like, I mean, everybody's to blame who is in the more. You can't point fingers at one person, but everybody was to blame who was involved. Right?
Everybody was to blame. There's a stick figure presentation. It's funny about when they call it like a house of cards, but that was everybody from the regulators and from the mortgage bankers and the wholesalers and the loan officers, the lenders, anybody who had anything to do with the bond traders, because everybody was just trying to see the bottom dollar, and nobody was seeing the effect, the long-term effect of what was going to happen, except for the guys who invested in shorting.
The big
bonds.
guys,
So, a couple of guys invested in shorting because that kind of got popular, obviously, and then those guys made out. But for the most part, everybody else you saw what happened to the housing industry during that time. I mean, the values just completely plummeted, and that was definitely an economic crisis that we created. So the toxicity of the lending is what created the home values to plummet, because everybody that were in subprime adjustable rate mortgages, once those adjustable rates expired, the rates went up, but they couldn't refi because the values were going down.
Right. So
it kind of crashed in on itself, and we created that. Whereas now, there's not that toxic lending right now. Right. So most people are in long-term fixed rates, and so I know that some of the people now may speculate, well, the housing market would crash, but really, you don't have to go anywhere. I mean, you could sit there in your house with your low fixed rate, if you refied in the last 3 years, paying the low mortgage payment you have, and just wait for the market to correct itself.
Right.
So it's a little bit different from then. And then I was out of the business for about a year, going back to my history, and I was helping doing loan mods and whatnot, and falling back on my bartending, my cocktail Tom Cruise days. So and then I ended up back working with Pacific National Lending, which
You've been there for how long now?
And I've been there since 2009.
That's crazy.
Yeah.
So what, 15 years? No, 13? Almost 15 years.
Yeah.
That's amazing.
And the reason that I like that is because during the time before the 2008 crash, I was kind of jumping around like realtors do. They say that a lot of them will jump from place to place, and even some loan officers. So I didn't have a lot of longevity before that with one place. And so it's really nice the fact that I've been in one place for so long, because it's enabled me to grow and evolve in business and build great relationships, network with great relationships.
Yeah, and you have a great team that's behind you too. I know that most everybody's been there for a long time. That helps, having a team that you can always rely on, that you know is going to do a good job for you. That always is helpful.
Yeah, it is helpful to know.
Helpful to know those people. So let's talk a little bit about your personal life. I know you're a big Raiders fan. We all know it. My husband is too, unfortunately. You
Well,
go to games.
yes.
I like watching your story. He literally travels everywhere. I'm like, where's Mark at today? He's in Costa Rica. He's going to Vegas for a game. I'm like, okay, you're just jet setting. No big deal.
Well, right at the moment, I don't have any
No big
little
plans.
ones going. The only ones I'm responsible for are my four-legged
Yeah.
kids. So those so being able to to plan impromptu, so to speak, is always fun. Although nowadays I'd like to kind of plan it out a little bit more.
Yeah. But it's kind of nice. Like, if one thing COVID taught all of us, like, we can really work from anywhere. Like, it doesn't matter
right.
if you're in Costa Rica, if you're in Vegas, or wherever you may be, we can work from anywhere. Nobody knows.
As long as we have an internet signal,
yes,
we're good.
we're good.
As long as you have what you have to do over when you're out of the country, you have to get the internet signal.
I need to do that. We're going to Mexico
Yeah,
in June.
Well, it's a VPN. You have to get the VPN.
Oh, yeah.
Because what happens is some of the lenders that I work with, they would not let me in from overseas.
Oh, because it looks like somebody's trying to like hack
So
your account.
so you have to get the VPN, which makes it think that you're in New York or San Francisco or somewhere. So but that's easy. Nowadays it is.
Yeah.
Technology is, since in the last 10 years, I think we were talking about how social media is so different than even 5 years ago and 10 years ago. And everybody is literally on social media.
Everyone. And everybody has an opinion on social media. I was saying 10 years ago, well, let's see, actually 12 years ago, I graduated high school. And I remember Facebook. Well, MySpace was like the big thing. And then MySpace kind of faded away, and it was Facebook. And I remember it being kind of like, today I went and got ice cream and it was good. Like, it was nothing big, right? Now it's like everybody has an opinion. Your opinion is not valid. People fight on it. It's just everybody has an opinion about something on Facebook, Instagram, Twitter, whatever social media it is. It's taken over our lives. We were joking, like, TikTok is like so addicting. You just sit there and scroll through it. But it's kind of cool. We were talking about it's a way to get news like we've never gotten before. And we were talking a little bit about what's going on in the world right now. And we're like, we are getting to see this all play out right in front of our eyes. And it's not, just here's what the news is telling us. It's like, no, we get to actually see what's going on and like hear the stories. You have people who are like, this is what's going on right now. It's amazing. I mean, amazing, but terrifying at the same time.
And, it's funny you say that. So what I usually do now with social media is because during a couple of years ago, there were some things going on and there was a lot of controversy.
The presidential
election. I didn't want to get political one way or the other, but it was just watching the division and people attacking each other. It just really turned me off of social media. So it's kind of like take what you need and kind of leave the rest and take what you need. So you sort of look at what, the right now, the unfortunate conflict going on in Europe, it's been like none other with social media, because you're actually there more than even than television.
Right.
So, and people are just self-reporting, and so the ability to see that, and everybody that brings something of value to social media, something that's with health, or whether it's philanthropic or anything that just, people will even put on just things for the day, just say, hey, feel good about yourself. And
motivational. And it's great for our business. A lot of people don't leverage social media the way that it should be. And sometimes I'm guilty of it as well, but it's amazing way to reach a lot of people in a small amount of time. And I know, like, when COVID happened, I'm like, all right, I have a premature baby at home. I don't want to go out and see a million people because I don't want to get my baby sick. So how can I do that? Okay, let's leverage social media, start posting things, all positive. It's not like I'm like, doom and gloom, here's what's going on. No, it's like positive, uplifting, stay in front of people. And really, for our industry, not enough people leverage that, because, I do see a lot of amazing, real estate agents, loan officers that just do a phenomenal job on social media, but it's really important part of our business that I feel like a lot of people don't leverage, and lenders in particular, because you guys have been so slammed the last 2 years. They're like, I don't even have time for that.
It's funny you say that, because I actually have when I go, like today, I had a coaching meeting and just harped on videos.
Yeah.
So I do
Well, here we are.
realize, yeah. And I even said I'm doing a podcast today. Oh, that's great. I want to see it.
Yeah.
And I totally support that view of doing videos and being on social media.
Mm-hmm.
And when I first started doing them, I was like, oh, I didn't do that one right. It took me an
So
hour. And
uncomfortable.
I kept saying, oh no, I didn't look like this. And then it's just like the second time I did it, it just went out,
And it looks the
just flowed.
same. One thing I learned is like, because I do videos quite often, I just don't watch them back. I never watch them
Just
again.
post them.
One time I had somebody screenshot me and say, oh my gosh, this video was so good. And I'm like, I don't even know what I said, but thanks. Like they screenshot it and sent it to me. Because it's like, the message, as long as your message is clear and what you're trying to get out, nobody's gonna look if you like looked funny or like your nose looks weird or whatever. Nobody cares. Nobody cares. They're just watching, trying to get the content out of the video. So I think with social media and our industry, like it needs to be used because it's a wave of the future. I mean, or it is here. The future is here. This is a platform everybody's using. So I'm really big on that. And I know
the future is definitely here if you hear my broker's Tesla backing up. It sounds like the future. I was like, well, yeah.
Yeah, our neighbors have one, and every morning I can hear it. She goes to work far earlier than me, and I hear it every morning. So I'm like, oh, Jenna's leaving for work. I'll like sometimes text her, like, I just heard your car. And she's like, is it that loud? I'm like, it's not an annoying loud, but it's like, like, and she's backing up. So yes, the future's here.
So I'll just elaborate a little bit. You were talking about how I like the Raiders, and travel. So I actually followed them to Europe a couple times.
I remember
to
that.
London and to various countries in Europe. And they're now, the NFL's talking about going to Munich, and I'm like, or going to Germany. I'm like, oh, I want to go to Munich. So hopefully what's going on in the conflict in Europe, because right now I don't even know if I'd want to travel at the moment.
I don't think I would.
At the moment, I don't know if I'd want to travel to Europe. I am planning on going to Costa Rica, and it's funny you mentioned because the pandemic and traveling, because I haven't myself traveled internationally since 2019.
Yeah. It's different too. I know we're going to Mexico and it's like a whole testing thing. And like to get back into the United States, you have to do these tests and they don't even care about anything, just that. So it's just interesting time and it's so expensive right now.
But I think hopefully, because I know that even Australia dropped their...
Did they?
And Bali. So Australia was one of the most strict countries and they just dropped it.
I remember seeing
and
that.
Bali I think a few weeks ago.
Yeah.
So hopefully the U.S. will follow suit before I have to come back.
I hope so. When are you going?
I'm going up April 11th.
You just said I have no big trips planned. Oh, by the way, I'm going to Costa Rica.
Oh, that's just down the road.
That's just down the road. He'll be there in a couple hours.
Costa Rica's like Hawaii.
That's
You just need your
awesome.
passport.
Yeah, a little important tip. So let's talk about something a little unconventional or different, like what you do. So I know your primary focus is loans, and you've been a lender for many, many years. But within the last, is it fair to say, couple years, you started doing some real estate as well. Obviously, loans being your number one, but you do real estate as well.
Yeah, so I'm glad you brought that up. So back in my history, so when I first got when I was with Cornerstone Mortgage, they were a Department of Real Estate broker, and before the NMLS started in 2012. 2011 or 2010, whatever that was, which is where all the loan officers now have to get licensed in one way or another.
Gosh, that's an idea.
So back before that, back in the day, back in 2005, and when you worked with the Department of Real Estate broker, if you were doing loans, you had to get your real estate license. You had to get it. So I had to get my real estate license back in 2005. So I already had it. And so when I went to go work with Jason, he was a Department of Real Estate Pacific National Lending, so with Jason Skelton's broker. So when I went to go work at Pacific National Lending, I had to have my real estate license because we still didn't even have an NMLS yet then.
Wow.
And I would just have my real estate license. And so NMLS started because the Barney Frank Dodd Act that was a direct effect of the 2008 crash came to, they wanted to register and license loan officers to keep track of them so that nobody was doing any kind of toxic or predatory lending, or they could keep track of you. Another way to make money for another side. Yeah. So that there's two factions there. There is Department of Corporations, and then you can be, you can have your NMLS license controlled by either state real estate board, and in this case, Department of Real Estate. So my NMLS is hung with California Department of Real Estate, and I have a real estate license. So getting back, coming all the way full circle, about 2015, 2014, I had a client, a close client, who asked if I could help him, and I said sure. So I don't really make it a practice to do that. I'm not out marketing myself as a
Right.
realtor, but
And you've always been clear about that. Yeah.
but I work with many realtors and totally lending. My lender hat is on all the time, but on occasion I will help somebody with their real estate. So and what I like about it is it broadens my horizon ability to help other realtors because I know exactly what they're going through. I know the contract, and I know the nuances of the real estate process. So it helps me to kind of help them empathize with what they're going through and to make sure that I'm communicating with them to make
Yeah.
sure
You know what it's like to be on the other end and not
I
have
know
a
what it's like.
lender. Yeah.
Help if they want to brainstorm with me or bounce something off me in regards to the real estate. It helps me to build their business and as well help them through a smooth transaction.
Yeah.
So it's definitely been, and it's great to be able to put on that hat once in a while. I saw where you finally had a realtor and a lender, and I was like, wait a minute.
I know. You're like, I can do both.
I can do both. So yeah,
That's me, which I've never had. I've never had real estate and a lender together, and I've never had somebody who does real estate and lending. So
there you go.
we're just checking boxes around
Checking
here.
boxes.
And it's kind of cool because you have a different perspective of what's going on in the market from like two different angles. Because I know for lenders, it's easy for them to be like, well, rates are good, and at the time refis were amazing, and they're getting a lot of deals from agents. But then you have agents on the other hand that are like, it's brutal out there. Buyers are not getting their offers accepted. Things are going X amount over. But as a lender, yes, they know that, but they don't see it because they're not in the trenches doing that. That's not their job, to be fair. So kind of shed some light on that, like being both. You get to see both sides of it.
Yeah. So basically, and it's funny because they're not in the trenches. Well, they're not showing their clients 20 houses
Right, on the
and
weekend.
having to make 10 offers and
None getting accepted.
none getting accepted, and trying to keep I think what it is, you're trying to keep your client and your buyer motivated because they don't understand. A lot of them, if it's their first time, or even the ones that have not bought a house in a few years. This is different.
It's so different.
This market is definitely. The real estate market is a somewhat of an anomaly, just like the pandemic was, and just like what's going on right now with the Russia-Ukraine conflict that's creating the cost of oil to go up and creating rates to go up. So these things don't normally happen. And so it's with the seller's market, and the seller's market was already hot, and it's already going on for the last few months, just because of the lack of inventory, and we have this migration of people, and at least it's going on everywhere in the country. But for us, a lot of it's the migration of people coming from the Bay Area, especially after they realized that they could work from home and they can telecommute and they can buy a nicer house in Roseville than they can get in the Bay Area
And keep the same salary that they have.
keep the same salary, and they can get it's a nice Roseville, and those areas are really nice. You see the media comes out and goes, oh, this is one of the best places to live in America, and I was like, oh, I'm going over there.
Except in the summer, it's 110 degrees and there's smoke
110
everywhere.
degrees,
But other than that, it's great.
Other than that, yeah.
Get out of here. No, I'm just kidding.
Yeah. So from a real estate aspect, it's just about motivating your client and trying to strategize on how to sell yourself to the seller and the listing agent. And even then, I mean, you hear stories about, because speaking of social media, being in the groups, being in the real estate groups, being in the lender groups, and the realtors coming out and go, I just put $150,000 over asking, and we did this and we did that, and we still didn't get accepted. So it's just a sign of the times, and you just got to keep people motivated.
Yeah.
Just keep your head
Which
up.
I would imagine as a buyer, it's hard to stay motivated. I know I've mentioned in the past, there was this like 30-second moment my husband and I had that we wanted to buy a house with an in-law quarters. This is probably early last year. We were like, let's just go look at it. So this is before it got insane, right? We're like, we'll go look at it. It's in our neighborhood. We just drove over there. Actually, I think we walked. We walked over there. We're like, wow, this is amazing. We could do something with this. Like, okay, so one of my good friends is an agent. I said, can you just call him and see what he says, right? The guy didn't answer her call. And she's like, I don't understand, like, why he's not answering my call. Finally gets back to her. She explains our situation. We'd be contingent. We haven't even sold our house. He's like, I have 17 offers going $100,000 over the asking price. So sorry. And I'm like, oh, okay, this market's a little crazy. And then you kept hearing those stories over and over. And I witnessed it firsthand, and I was defeated. I'm like, I'm not even going to look for a house right now. We have a low interest rate. We have a very low mortgage payment. We bought our house for $400,000 less than what it's worth now. Why would we move? So I can imagine as a buyers getting discouraged after one house that we looked at that we weren't even really that serious. We literally had no intentions of like loving it. I'm like, I don't want to do this. Forget it. We're staying put for the next 20 years.
Yeah.
So I can imagine buyers getting super defeated. I mean, unless you have to move, right? We don't have to move. So we're not motivated. But I got my little slice of it and I was like, oh, I empathize with what these people are going through. So like, how do you keep your buyers motivated?
Well, I mean, because there is something that I feel that's always going to shake loose. And for example, if you have, and this is just, I'll just say hypothetically, a house that's been overpriced. So some of the sellers are going to be, I want to, for lack of a better word, a little greedy. So they're going to come out already
enough.
too high,
That's what they're seeing,
too high, and they're just not going to get offers. Or they're going to get very far and few between offers, or maybe not attractive offers. And so what you do is you wait for that house to be on the market for about 3 weeks to a month, and you realize that that's any house right now that's on the market for over a month. There's something going on. It's either overpriced or there's something that happened that they needed to fix, and
it's owned by Zillow. No.
Or it's owned by Zillow or Open
kidding.
Door.
I see that all the time.
yeah,
I'm like, why has
yeah,
that house been on the market for
well,
100
Zillow
days?
and Open Door, and I don't want to talk
Poorly
about anybody here, but basically some of those corporate type of lenders, I guess you would call them, maybe they overprice.
Right.
Maybe
they bought it too high and are trying to sell it too high.
Trying to sell for too high. So that's something, and you can go in and maybe negotiate with that, and not just them, but with any seller who has it on there. Maybe there was something done. Maybe when the first buyer was in there, they found something in the home inspection and they couldn't get it fixed. And now since then, the seller has fixed it, but they lost that seller, but it's now still on the market. So that's a time. What you got to do is you got to just find that window of opportunity and get that, because those are out there.
Yeah.
Yeah. So it's just a matter of finding them.
Yeah. Well, it's good advice. If anybody's listening that's a buyer and you feel defeated, that's good advice. Like, it'll happen. It'll happen.
You can call me. I'd be more than happy to counsel you.
Come on,
I can
get it
find you a
out.
good realtor. Whatever that may be.
Well, let's switch gears to lending now. And let's kind of, we're actually let's switch gears and let's take a break really quick, and we'll come back and want to talk a little bit about what you think is going to happen in the next 6 months to a year. I know we've touched a little bit about what's going on right in the moment, but how do you think that's going to trickle down in the next 6 months to a year? So we'll take a break and we'll be right back.
Okay.
All right, we are back, and we were just talking a little bit while we were off, and he's like, wait, we didn't talk about this. We didn't talk about this. So I'm like, you have the floor. But we did want to talk about the biggest thing, the biggest question, and my favorite thing to talk about is, what do you first see happening? We talked a little bit about what's going on, but what do you see happening in the next 6 months, maybe a year? I know that's a long time away, but.
Well, if I had a crystal ball, it would be great, because everybody would be coming to me. Yes, everybody coming to me to do loans. But it's tough to speculate. We do try to. There is a lot, many of analysis that we see online that does try to speculate, specifically for myself and a lot of other loan originators. There's a MBS Highway. There's a 1003 Magnet, which I think is real estate rate magnet now at this point. But what they do is they'll provide us updates throughout the week, specifically daily, morning and afternoon. They let us know when to lock, when the market is dropping or when it's getting better. And lately, if you want to talk 6 to 12 months to possibly within the next 24 months, Barry Habib, who does the MBS Highway, was talking about how the 10-year and 2-year treasuries were going to kind of cross in the future, and that is indicated in the past where when that has happened, that a recession occurs. So if that happens, then as we were speaking off camera there, that you could possibly see rates go down, but lack of economic growth. But with rates going down, that would help bring back a lot more people into the housing, trying to buy houses. So then housing hopefully will remain well.
Yeah.
Or depending on the inventory is also if you have builders that are buying more inventory, but people tend not to sell in a recession.
Right.
And people tend not to resell when there's
They're
uncertainty.
scared. Yeah,
when there's uncertainty.
yeah.
So that's why we're having a lack of inventory with the pandemic. same thing with this thing going on right now, the conflict in Europe. And as we were saying, so we've had two anomalies back to back. We don't see a pandemic in the last 100 years. We don't see a land conflict in Europe in the last 100 years or last 60 years, where we're getting a country that has natural resources like Russia with natural gas and oil, and right now we're sanctioning them, and we're not receiving any of those natural resources. So that's why we're seeing, at least right now, while this video is going, we're seeing
It's March 8th,
you have to come to get a mortgage loan just to get your gas tank full.
Right.
Right now,
I saw that meme. It was like, I just got approved for a loan for the gas.
For the gas, yeah. And so that right now, but hopefully that will level off that type of, I mean, we would like to hope for the humanitarian reason that the conflict in Europe ceases soon, ASAP. And if that's the case, things get back to normal. We can get back to getting commodities that we need from Europe, and we won't have these high-priced gases. But one thing about rates, regardless of whatever it's causing, whether it's consumer price index or because the Fed, whether they're going to raise the interest rate. And when we talk about them raising the interest rate, it's not raising mortgage rates directly. It's raising the way banks lend to other banks, which is direct effect on your prime rate, your credit cards, stuff like that. But it has a ripple effect. So, however, when they raise the interest rate, bond traders thought that they were going to raise it to 5%. Well, he's talking about on March 16th raising it to 0.25%. And when they raise interest rates, bond traders see that as fighting inflation. Inflation is a taboo for long-term rates, 30-year mortgage rates. So when there's high inflation, there's high interest rates. And when the Fed only goes to raise the interest rate a quarter instead of half, then you're going to get higher interest rates on mortgage rates. Believe it or not, I know it's ironic here, but it's because raising the Fed interest rate higher would actually fight inflation, and rates would actually could go down. So it would have a ripple effect opposite to mortgage rates. So, but they're not seeing that right now. So this March 16th, which is, what are we on the whatever the day? The 7th. So when people see this, they'll already know how far they raise the interest rate. If it's only a quarter, we could see higher interest rates in the short term, but over the long term, depending on whether we see recessionary type of activity in the economy, maybe rates will go back down. So it's, like I said, it's tough to speculate. You're putting me in the corner here right now.
I said you don't have to say specifically what you predict happening, but when you say recession, to me, I'm like, because 2010, I was so young, right? Or 2008, 9, 10. When the economy crashed, I was so young. So seeing that from that perspective was terrifying for people my age. We didn't really know what was going on. It was something that had never happened before. That's what we think of when we think of recession. If you ask my grandma what a recession is, it's different. She doesn't. That's not her only experience. She's lived through multiple. So let's hope if there is a recession, it's not what it was.
And just for our generation, we didn't live through, and we borderline a depression with the pandemic, but it was a little different from when your grandma was trying to save cans back in the 30s and 40s or whatever, in the 50s,
depression,
40s, the true depression. And so the recession is, like, I want to say it's halfway to a depression, so it's not really that full. But it's just what a recession does is it's your economic growth is not going the way it should be, positive. It's kind of like leveling off and maybe falling a little bit. So you're not getting the economic growth that you want in the whole big picture or economy. There's a lot. If we had an economist here, obviously we could
go deeper.
We could go deeper and bore everybody.
Well, in 6 months, I'm going to play this back to you and be like, Mark, no.
I'd rather talk about traveling and going to Costa Rica and the Raiders games and
and your dogs.
And the dogs, of course. My mascot now.
Yes.
No, definitely, I would think that just everybody just keep positive, and I think we're doing good. I mean, we made it through the pandemic.
Did we? Are we done?
I think so. I think we're getting there.
Okay, that's promising. I told Mark before we got on here, I was like, I don't watch a lot of news. I try to, I'm raising 2 young babies right now, and my focus is to just be positive. And the news can be a very negative type thing, regardless of one way or the other. But I'm like, I stay off the news. So he's like, we're almost out of there. So you're my news, Mark.
Well, it seems like we made it out of the pandemic. I mean, a lot of people, we're not having to wear masks like we were before and involved, in force. And so hopefully that will sort of succeed, and hopefully everything else will come back and correct itself, and we'll all be happy, smiling, drinking margaritas or virgin margaritas, or whatever you call it, on the beach somewhere. So
Whatever floats your boat. Well, thanks for coming on. You're amazing. What's the best way for somebody who's listening to get a hold of you?
So can I give my phone number?
Yes.
Okay. So if you have any questions about mortgage or real estate, or any questions and just want to get counseled on how to get pre-approved, or if you are trying to do any kind of lending, even including refinancing right now, please feel free to call me, 916-947-0644. And you can also go to my website at www.markavilaloans.com, and that's spelled M as in Mark, A as in Apple, V as in Victor, I, L, A as in Apple, loans.com. And there's an application there. I just wanted to just touch on one thing about refinancing too. Right now we have plenty of equity, as we talked about. And so a lot of people are out there doing home projects and trying to consolidate if you're trying to consolidate high interest debt. We didn't get into some of the specifics about carrying a lot of debt and how you would be spending, for $50,000 worth of debt, carrying at 12%, you could be paying $30,000 of interest over 5 years, right, or even spending that on a home loan, home improvement loan, where if you put that into your house, that's even tax deductible, the home improvement loan. And I didn't want to get into too much taxes. Contact your tax consultant for taxes. But that said, I'd be more than happy to consult with anybody trying to refi right now and save a little money on their overall bottom line, and or get money for home improvement.
I love that. That was great. Nobody's ever done that before. It's kind of put it all together, because that's true. People think there's no more refis, but if it fits what you need, that's great.
That's going back to my roots.
I love it. Well, thanks again for coming on. You did amazing. And thanks to everybody who's listening.
I appreciate it, Bree. Thanks for having me.
Absolutely.
Alrighty.
Bye.
Bye.
Good job. I like the ending. That was good.